Today, I prepared a very huge topic of how you could possibly invest like the 1%. And today, we're going to be analyzing and applying Ray Dalio's portfolio. Ray Dalio was one of the biggest investors in history because he predicted different types of recessions and depressions and was profitable at the time where everybody was losing money. So, his portfolio, Ray Dalio's portfolio, is probably one of the most controversial and most useful portfolios you're probably gonna see in the investment world. You might not apply it at a certain extent he is doing it, but at least you will have the understanding of how he diversifies his money. So we talked about diversifying in a previous video I posted. If you haven't seen, go back and check out what asset allocation or diversifying is. Simply, Ray Dalio, one of the best investors in the world, is known for diversifying his money or his assets in different uh, commodities. One, stocks and bonds. So this guy, obviously, who was born around the 60s or something like that. I'm not pretty sure, but he is somehow not a person who is an investor in the 21st century. He's not like the Gen Z investors who are investing in crypto and other different assets that are new, like NFTs and stuff like that. He used the original types of investment strategies, which included diversifying between real estate, commodities, stocks, and bonds. There are different types of bonds, there are different types of stocks, and obviously there are different types of commodities. But analyzing and applying them in the right way, like he did, could possibly make you millions or break you at the end. So, anyways, without further ado, let's go on to Ray Dalio's portfolio. So, here it is. In other words, this portfolio is known as the all weather portfolio, meaning it could possibly survive to inflations and deflations, market crashes, depressions, recessions, any type of market situation that could possibly affect your money. This portfolio right here is known to, survive it. So simply, uh, the first, the first and the biggest part in this portfolio are treasury bonds. Treasury bonds are simply national bonds that could be different in return, but are pretty good inflation inflation avoiding methods. And it has low returns, but still, if you want to have a lower risks and a lower return with a huge budget, treasury bonds could be a good investment. When we go on to the next mark, it's inflation linked bonds. Treasury bonds might not be as efficient as inflation linked bonds when it comes to surviving inflation. So, having a couple of money on inflation linked bonds is a pretty good thing. I'm not saying invest in them because in the 21st century there are more opportunities you can make a lot of money on safer. So these are just methods people have been using in the past, like rate value. The next part is stocks. Obviously, stocks are one of the major investments, and you should really have it a part of your own portfolio because most people who have built worlds have actually been using the stock market as a weapon. Then diversifying between indexes, ETFs, and low penny stocks and high blue chip stocks could be a huge asset. Emerging market bonds, as the name implies, is just a bond which reflects emerging markets and is a bit risky compared to the last two bonds, but has higher returns. Commodities like gold, silver, and etc. have been known to be a good inflation avoiding mechanism because you could shift your money to gold or any other asset like commodities and avoid your money going down. As you know, the gold's market cap has reached 10 trillion and it has room to grow. So possibly investing in it is a pretty good thing because it's pretty stable this couple of years. Corporate bonds, like the name implies, is bonds that simply corporate organizations have, and it's a pretty good investment if you are investing in a company that you believe in and has a certain increase in the stock price throughout the past couple of years. You could possibly benefit from it if you could possibly believe in the company. So that is it. This is Ray Dalio's old weather portfolio that has been working for the past, I don't know, 40 years or so, and has defeated recession, inflation, depression, every obstacle that was put in front of it. And if you are planning on investing, doesn't have to be this portfolio, but at least diversify. The biggest part of this video is diversifying. So that's for today's video. I hope you liked it. Don't forget to subscribe, like, and comment suggestions of future videos. So thank you.